Good morning and welcome to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, after the unsurprisingly weak close yesterday, it seems like the bulls want to retake the narrative and probably look like we are going to open in the green. If you look at the Nifty futures on Singapore Exchange, they are indicating a mildly positive start for our markets today. Following on the positive, rally that we have seen in US stocks overnight, Santo, Wall Street did end higher, largely led by banking stocks as well as technology names. Apart from that, today, Santo, we are going to have two companies listing on the bourses, Delivery as well as Venus Pipes. While Delivery's outlook looks a little patchy, analysts are expecting it to probably open with a discount to the IPO price. Venus Pipes looks like it's going to have a strong start. So, yeah, the startup space not looking that great.
Well, CJ, probably the trend that we could again see today would be that of, a strong open, but stocks struggling to sustain at higher levels.
I hope that is not true, Santo. I hope so. I hope that probably we will have the bulls at least taking hold of the narrative for the remainder of the day and at least close in the green and not give up the gains that the catastrophic gains that, action we saw yesterday when the market was doing so well, right, throughout the session. And then in the last hour of trade, it gave up all of its gain and ended up, closing in the red. Despite global cues actually were positive. So that shows that there is a lot of nervousness. I mean, there is a lot of tentativeness.
If you look, post-market hours, Snap has issued a warning, and because of that, you're already seeing the Dow and Nasdaq futures being lower. And if you see, already the SGX Nifty has given up some of its gains, and it's a mildly positive start. So there is clearly a crisis of confidence in the market at current levels. You're seeing some bit of short covering here and there, some bit of bargain buying, stocks fall steeply, there's some bit of buying, but nothing that really sustains. And as the RBI governor also made it very clear that, the war on inflation is on, and rate hike in the June meet is a no-brainer.
Absolutely. That said, the crisis of confidence might be there in the larger market, but some individual stocks are not showing that sort of crisis in confidence. And let's quickly get into some of those names, Santo.
Well, we start with ICICI Bank. Now, CJ, good comeback by this stock. ICICI Bank was among the big losers last week when you saw a broad sell-off in banking shares. But since then, it's been steadily, climbing, and it's once again crossed above 700. Now, overall sentiment for the stock has been quite good. If you see the run-up over the past few months, many analysts in fact look at it as a strong re-rating candidate because we are already seeing good improvement in all segments of ICICI Bank. The fourth quarter numbers clearly showed that. Net slippages were down. Besides that, you're also seeing improvement in the retail, SME, and to some extent the corporate segment also. So, this is a stock which I think is set for a re-rating, and you could see it do well from here on.
Well, after the sort of performance it has had over the 2 years, I don't know how much scope there is for re-rating. I mean, if the stock is not re-rated already, I don't know what re-rating, is all about. That said, I think the key trigger for ICICI Bank, much like the rest of the banking sector, is about loan growth, right? And the prospects on that front do not look very rosy at this point of time. They probably looked good when we were starting this year, and therefore we saw the underperformance or the underperformance that banking stocks had all of last year sort of recovering a little bit compared to the broader market. But again, if you look at the performance of the banking space over the past 1.5 months, it doesn't look like investors are that confident that growth in loans will probably be as strong as they thought, largely because of wider macroeconomic factors that we are right now feeling. Inflation has become a major concern. There is demand slowdown. There is growth slowdown in the domestic economy. So therefore, that given that sort of a macro environment, I'm not sure if re-rating is probably on the cards. If you look at even from a technical point of view as well, from a medium to longer term, things are not looking as great, on the technical charts for ICICI Bank. The moving average are moving lower, and I still feel that there is room for bearishness, especially given the sort of selling momentum that FIIs are bringing to this market. I really doubt that ICICI Bank is going anywhere in the near term.
Well, CJ, I agree with some of the points that you have made. When the outlook on the economy is not all that great, loan growth is where, it first takes the beating. But even in every sector, for instance, there'll always be winners. There'll be one or two stocks that do well and they're good long-term bets. So I think I would put my money on ICICI Bank as one of the stocks that's likely to do well in the banking space?
Well, you can go with the old horse Santo. I will put my money on Olectra Greentech. Now, this is a stock that has been, in the in the radar of investors over the past 1.5, 2 years now. Even longer, if you think about the way investors have been searching for scouting for electric vehicle related theme stocks, and Olectra Greentech definitely is in that category. The company is basically a play on the EV revolution that we are seeing undertake or take hold in the country. And recently, just yesterday, the company announced that it has won orders worth more than 3,600 crores to deliver about 2,100 electric buses. So that goes to show that there is, order building up now for the company, and definitely this sort of an order book will boost revenue visibility going ahead. Apart from that, if you look at longer term technical indicators as well, it's still in a golden cross scenario, right? And generally, if you're in a golden cross scenario, the longer term technical outlook remains bullish, even though in the near term charts it might look a little bearish because of the price action it has seen. Much like the rest of the market, Olectra Greentech has also gone through a decent fair amount of correction in the market, but I think these sort of corrections probably will give bulls on the stock entry point into the counter, given that for the longest time last year, Olectra was probably among the most expensive stocks out there, probably even more expensive than Tata Motors at one point of time.
See, CJ, my only concern here is that the market seems to have lost its appetite for theme-based stock. Now you mentioned EV revolution. Now EV revolution was a great theme, let's say about a year back. You saw that in the price performance of many of these stocks as well. So something like Olectra has rallied from a low of about 44, 45 bucks into 2020. It almost came to close to about 900 odd.
Absolutely.
And since then, from February onwards, the stock has been slipping steadily.
Yeah,
okay.
yeah.
You mentioned valuations. Well, it may have softened a bit after that steep fall from close to 900 levels to about 500 levels now. But even after that, it's still a pricey 125 times trailing earnings, which I think is slightly on the higher side in this kind of a market. It would not have been such a bad thing had the overall sentiment been positive. But here on, market I think will be a little fussy about execution, how they are able to deliver, grow the bottom line. So that could be the overriding factor, at least for the next few months, which I see could put the stock in a narrow range.
Santo, I don't doubt that the market will be fussy, and if you talk about multiples, price to earnings multiple, of course the price move has already happened. Now the company has to deliver on those expectations. It seems like it can, if you go by the recent earnings performance and if you go by the sort of orders it is getting, it seems that it can actually deliver on those earnings. And as and when the earnings will catch up with the price action, you will see those multiples moderating even further from here, right? The story here is not that suddenly, oh, this was a theme that is over, right? EV is not like startup, right? It's not dependent on, cyclical funding and stuff like that. This is a natural theme that is going to happen across the world over the next 10, 15, 20 years, right? This is not a story for just today or tomorrow or maybe just the next 3 years. So that is why, from my point of view, if you are really trying to play the revolution, not just a very, a sort of a near-term trend, then probably these sort of levels are a very attractive opportunity.
Well, M&M, the next stock on our watch list. Now, CJ, very simple story here. This has been one of the strong performers in the auto space. It's now close to making an all-time high. There's been the demand for SUVs, passenger vehicles in general, has been quite strong, and then there is the tractors play as well. Stock looking quite good on the charts, as well as the fundamental story is good. Is set to deliver strong earnings for this quarter. Trailing 12 months, if you see the performance so far, has been pretty good, and there's no doubt that for the year as a whole, the company will deliver very strongly on all numbers. So this is a stock I'm very bullish on.
Santo, SUV side, I definitely do not doubt the story that is developing, given that discretionary spends in the economy still remains quite good, thanks to the K-shaped recovery we have seen since the pandemic. But I'm a little cautious on the tractor side of the business, given that just a few weeks ago when we were talking about escorts, if you will remember, you had suggested that, of course, rural demand recovery could happen because incomes might recover given the jump in food prices we have seen internationally. But now with the ban on export of wheat coming in, probably we could see other cereals also going through such sort of actions. That sort of curtails the income upside that the farming side of the economy could see. And taking that into account, I am a little now, probably not as optimistic as I was about the rural demand recovery in the second half, as as a lot of the investors would be thinking. So for me, we will still have to see, what sort of government action is going to be taken on the export side of this, because let's not forget that the export story in the food side of the economy was actually was getting very attractive, right? With farmers probably able to supplement the probably weak demand at home with the strong demand outside home or in abroad. So with that taken away from them in a very sudden way, I will still wait to see how the tractor story of M&M develops going forward.
Well, that we might get into a macro debate on that, but on one side, if there
M&M is in a way a proxy to
yes,
macro.
if even if let us say there is cap on exports, for instance, let's not forget that inflation is also very big rural problem. So
Yeah.
when by curbing some of the exports, government is also trying to reduce inflation in this economy, and that eventually will help the rural side also.
That is exactly what I'm trying to say. There are too many variables here on the demand side at home, right? Domestic demand is going through too many, what do you call it, variables in terms of inflation, in terms of weak income sentiment, especially at the lower rung of the strata. So therefore, let's just be a little cautious on the tractor side of the business, while SUV definitely looks good. Talking of another discretionary story, SBI Cards is looking up, after what has been a very difficult 1.5 years for the company. If you look at the recent data that has come out for credit card spends in March, great overall for the sector, but greater for SBI. The company was able to outperform the industry in terms of adding cards, new credit cards, as well as the amount of spending that is happening on the credit cards. If you look at the credit card users of SBI, they have spent 54% higher than what they had spent in March of 2021. So that goes to show that momentum is building up again in the credit cards side of the business, which is very critical for SBI Cards. Apart from that, if you look at it from a valuation point of view also, Morgan Stanley believes that the valuations do remain attractive, because this is one side of the financial services umbrella which has not really performed, along with probably asset management companies. So they still remain very much overweight on the stock and are expecting a price target in the range of about 1100 rupees. So there is considerable upside available for SBI Cards, and this could be sort of a contrarian bet, in a market like this.
Well, could be. My concern are on two factors. One is that the RBI has floated a paper on capping merchant discount rate. That's going to be a big negative for somebody like SBI Card, because it's a monoline business. It just has this one line of business. It will hurt banks as well, but not to the extent, because credit card is just one of the many lines of business for them. So this is like in a classic case of all eggs being in the same basket. The second worry about it is the growing emergence of buy now pay later. That's definitely a threat. There's someone who doesn't want to own a credit card but yet can have the same facility, right? Why wouldn't he go for that? And that is these two factors, I think, probably could cap SBI stock in the short term.
Santo, BNPL is definitely a great argument, but as far as MDR is concerned, I think even if MDR rates are capped, for SBI Cards and of course other credit card players like HDFC Bank and now Axis, I think the story here is on volumes. If they can still have volume growth in terms of number of users they're adding, and this is still a very underpenetrated story in the financial services space, much like the asset management side of the business. So for me, this is, if their volume growth is strong, they can probably recover or take the hit on the MDR side of the business.
Well, last talk, the market is set to open shortly, about
8 seconds to go, and things are looking quite good, Santo, I must say.
So
we have had almost a positive start.
No, we haven't. The Nifty is down 10 points at 10 start, points, but then again, no surprise. Advance to decline ratio still in favor of the bulls at this point.
Yeah, I think it's the mid caps were outperforming.
Yeah, 1200 stocks up and close to about 500 stocks down. Nifty Bank is up by about 42 points.
Yeah, but the second line stocks are really showing a strong start at this point of time. Nifty Mid Cap 100 Index is up by 0.2%, while the Nifty Small Cap 100 Index is up by 0.3% at this point of time. So quite a strong start, but concerningly, if you look at the volatility index, that has shot up by more than 5.5% at the start of trade. That is not looking very pretty. If you talk about from a positioning point of view, where that indicates that probably investors are trying to hedge their positions. Maybe the long bets that they have taken over the past 1 or 2 days, they're trying to hedge those positions by buying more put options in the market, and that could be a little bit of a concern for the bulls.
Well, the last stock, Gujarat Narmada Valley Fertilizer Corporation, CJ, there's been a very, very volatile stock. It saw
Absolutely.
huge run up, suddenly went all the way, topped 900 bucks and then fell equally sharply. Now, I suspect that could have more to do with technical factors because the numbers have been actually getting better. March quarter, the company reported some very good numbers. Diversified portfolio there. It's not just a fertilizer play, but a big chunk of the earnings also comes from chemicals, which has been doing well. In addition, it has some other lines of business as well. It provides some services, but that's a small part of it. Today, the stock is among the cheapest, in the fertilizer space at about 6 times trailing when you compare it with other players. In addition, FIs have been raising the stake in the company, and in the March quarter, they raised it by about 5 percentage points. So this is one stock where I think the market is not still fully appreciating the improvement in fundamentals.
Well, maybe Santo, it is the volatility in the stock that is keeping the price to earnings multiple so low. That said, I think FY22 it's in itself has been a great year for GNFC. If you look at the profits, if you look at the revenue performance, they have largely doubled or almost doubled on a year-on-year basis. But I think the price movement in the stock that we have seen this year and even over the past 1 year, where the stock has risen more than 70-80%, I think has largely factored in that performance. Maybe this was just a 1 year story, given that some of the commodity chemicals that GNFC is involved in saw a big shot up in prices across globally. So what market is right now seeing is that this was a great story for FY22 in terms of earnings recovery, and that is, from my point of view, baked into the stock right now, and therefore it is vulnerable to intermittent profit taking at this point of time. If you look at the action from retail investors who are probably the early who are probably early on the stock, along with domestic mutual fund, they both have been pairing their stake over the past few quarters, which suggests that they are taking profits and selling on those the stock to probably foreign investors at this point of time. And technically also, GNFC, the charts are not indicating a lot of bullishness. From a near term to the medium term point of view, most of the technical indicators are blinking red. So I am very sure that the bearishness on the counter is not going to go away that we have seen in the past few sessions, even though the stock is among the outperformers, higher by almost 50% this year.
Well, that was all we had in stocks.
Yeah,
this morning.
but before we go, the World Economic Forum has rolled the red carpet for the global dignitaries and think tanks and the big shots. And yesterday we had Moneycontrol reporting from the ground and getting you all the actions. So here is a short glimpse of what unfolded yesterday in yesterday's session of the World Economic Forum.
With that, we'll let you get back to your trade, and we'll again see you sharp at 3 p.m. today.
And please post your feedback on the comment section below and follow us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and the Moneycontrol app. We'll see you later in the afternoon.
Thank you.